Good day, everyone. Well, as we've seen, this schizophrenic market continues to act in fashion, true to form, with the nice bounce we saw ahead of the Fed meeting, and then continuation of that strength when the Fed did indeed hike rates 25 basis points. And then the last 2 days, we've done a complete about face. Today it's quadruple witching, so it's going to be heavy on the volume. Looks like the NASDAQ is just under some major support, and of course the S&P is well under some major support as well. December, despite being tends to be a stronger month, or at least a more seasonally quiet month, but we saw that last year it had a very quick 5.5% correction on the NASDAQ, and this year kind of similar, something like 5% so far on the correction from peak to trough. So I think that a lot of these old rules that the markets are supposed to act a certain way because of this time of year, these are not normal markets. We've said many times they're the war. I think it just, you have to really be act in the present moment and make decisions in real time under fire, and don't get wedded to too many of these old hat rules, which many, of course, don't really apply. This has been a market where we've had some names come through on the bounce, but again, in the names that came through on the prior bounce in November, for instance, those names were, as we had advised, much better off being bought on logical pullbacks, expected pullbacks to major support areas. Because then if you're buying, the closer you buy to, say, a major moving average, then your exit point is, say, a break through that moving average based on some of these chart patterns that we've shown you in some of these weekly pocket pivot and Bible gap up summaries that we're sending out on the weekends. And those names could have been bought and quickly sold, maybe for, in many cases, less than 1 to 2% loss. And then the names that do work, the names that actually do hold and then go, I mean, you can easily get an 8%, 10% gain on those. So your win-loss is better than 3 to 1 in terms of your percentage gain. If you're making even 6% and you're only losing 2%, that's a nice 3 to 1. And then you would have to literally lose three names for every one that was a winner, and you'd break even. You'd still be breaking even in that situation. So it puts you in a good position of strength, even in this kind of very uncertain and tenuous kind of market environment, where, as we've observed all year, we really don't get any sustainable trends. And many of these stocks, earlier this year, there were more than a few that did very well, like the SKXs, and there were a few others that persisted and did not even violate any sort of sell stop rules. So those names, of course, make up all the difference because you can get some very nice gains, and then if your account goes up 20, 30, 40% because you've played some of those names, and then the rest of the year, it's like a slow bleed. You're chipping away at those gains because you're losing, if you're losing 1% here, 1% there, 2%, 3%, it takes a while to chip away at a 30% gain in that case. And hopefully some of you are still up for the year, and hopefully some of you are still up double digits. In a year like this year, if you're up 10 to 20 or 10 to 20%, you're doing quite well. And of course, everyone knows how tough the markets have been for hedge funds. I think it's one of the toughest years in a long time. Now, as far as the Fed dot plot said that they looks like they're gonna, or they expect to raise rates 4 times next year. So that telegraphs to the market that the Fed thinks the economy is turning a corner, and yet we're seeing on commodities, the price of oil, and so forth, there's still a severe lack of demand. These indices continue to plumb new depths. The Commodities Research Bureau is at 40-year lows. The last time it was at those levels was in the early 70s. So it's interesting that the Fed has a different view of things. And we'll have to see. The markets right now are telegraphing that they're uncertain. there, we did get a nice bounce, but now we're getting a retracement. And I wouldn't expect, well, I wouldn't be surprised to see this market continue this very sloppy sideways move that we've seen all year. This lack of certainty seems to plague the market. And without QE at the helm, it seems like the first move would be lower than well, the first major move would be a downtrend, then an uptrend. Without the QE to put the floor, the shallow floors in the market. And so ultimately, the markets will telegraph what the market's always right, and we will see whether the Fed is actually able to raise rates more than once. This might be the token rate hike like we saw in the 1930s, one rate hike, and then some years of heavy pain and heavy sell-off in the markets. But if the Fed is right and the economy really is returning the corner, they will be able to raise rates. We will see the signs, and the market, of course, about that by breaking out to new highs. And with that, I think I'm going to go ahead and turn it over to Gil.
Cool. I hope the beach in Rio de Janeiro is nice there, Dr. K. It's actually cold here in LA, but what were you saying?
The beach is still good. It's still around. It hasn't been blown out of the water.
Okay, the joys of not having kids. Anyways, you can go wherever the hell you want, right? You gotta love it. Anyways, the internet doesn't seem too bad there either. So, but anyways, nice to see that you made it there in good form. I think probably the most intelligent thing I think you could say about this market is that there is no trend, and so you can't play a trend, or you can't try and play a trend, because there is none. And it's basically just chop and slop. If you buy things off the lows, you can catch some moves, and we've seen that. If we go to I just heard this term recently, FANG stocks, which I think is interesting. It stands for Facebook, Amazon, Netflix, and Google. And I guess these stocks have continued to go higher. And for the most part, most of them are just moving sideways along with the market. You see Facebook tucks into the 10-day line this morning. Now, I know this looks pretty ugly, but it's a short-term trader's market, and you have to kind of look at it that way. And so any pullbacks I'm looking at buying, any rallies I'm looking at shorting. I'm not really trying to get excited about movement one way or the other. I tend to look at it in a contrarian way. And it is a short-term method. It's not a trending method because there is no trend. So like I said, when there is no trend, you can't play like there is, because if you do, you're just going to beat your head against a rock and just keep losing a little bit of money many times over, which eventually turns into a lot of money. I remember as Bill O'Neill said to me once, yeah, you'd lose $1 million here, $1 million there, pretty soon you're losing real money, which was pretty funny. That was right after 2000, I think, when we had just made just a tremendous amount of money, and so we had some money to burn. But he was right. You make some money, and like Dr. K was saying, you're up 20-30%. You can chip away at that if things aren't working, and there's a certain randomness that makes it difficult. So I would say if you are up 10%, if you're even up this year, I think you're doing okay. But for me, to be up 10-20% is really statistically insignificant. If you figure last year when I was up 115%, my biggest up day was like in a single day was up over 14%, and my worst single month was down 13%. So it's a lot of volatility if you're going to play the way I play. And what I look to do, or what I try to do, is build a cushion. And then once I have a cushion, then I try to push things and lever up and see if I can get something big going. That's how I made decent money the prior 2 years. But interestingly, that didn't really work this year. And I ended up having most of, when I would make money, I basically would get that chipped down a little bit. And that just was the process over and over again. You wasn't able to really leverage. I build a little cushion, and then I try to push it, and then it didn't happen. It didn't pan out. And that's okay. I mean, I got to admit, though, it pisses me off. But that's just the way it goes. When you're an overachiever, anything short of triple digits is failure. So in any case, I'm watching these FANG stocks, I guess. Am I going to start calling them that? I just call them big stock NASDAQ names, and I throw Microsoft in there as well. Maybe a couple others. LinkedIn for a little while looked like it might be one, but it's sort of fallen by the wayside. But you can see Facebook is hanging in there. It's a big leader. it's way up there. If we look at a weekly chart, it's building a nice flat base. I don't know if you guys can see that very well, but it's building a nice flat base along the 10-week line. It's found support below the line, but still above the what I consider a critical low here, just above the century mark. If we saw it start to bust down through here, then you got problems. And if you're long the stock, you might have to take protective action at that point. Of course, the last time it busted the 50-day moving average was here, and then here, and it even busted the 200-day, but held by the close on August 26th, the day of the capitulation Monday is what I call it, but other people call it the mini flash crash. And every time it looks like it's going to blow to pieces, it turns around and goes back up. So that's the difficulty of this market, but also it points out why, from an objective standpoint, why you need to have sort of a contrarian view of this market rather than let's go with the flow, go with the new great trend, and you're going to make a ton of money. It's just not happening. You know, I don't know how people say over at IBD, I feel sorry for those guys because they're selling a trend following system for stocks, and 6, 7, 8% stop loss. You do that over and over again buying a breakout, you're just going to get creamed over time. And I think what you have to do as a short-term trader, you have to think of this in terms of risk-reward. You know, in a trending market, if you buy a breakout, you're looking for at least a 25, 50% gain perhaps in the stock, and you're willing to take 4, 5, 6%. That's what I would take maximum on the downside. So you're looking at least a 5 or 10 to 1 risk reward to risk. That would be 1 to 10 or 1 to 5 risk reward ratio. And that's reasonable, okay? But if you're looking at taking short-term trades and you're only going to make 5 to 10%, well, you want to maintain at least 3 to 1, 4, 5 to 1. So you've got to have a 2, 3% stop. And the only way to operate in that case, from a practical standpoint, is to buy on pullbacks. And so whenever the market's pulling in, I know a lot of people will start salivating over getting short. I'll start looking at maybe getting long and seeing if I can catch a flip to the upside. I'm thinking maybe if we get, if some of the selling dissipates, and you're noticing the NASDAQ holding the 200-day, which we may set up some sort of a melt up into Christmas because all the selling will get out of the way. Now today's going to be a crazy day because it's triple witching. And there was a really strange move this morning. I don't know if anybody saw it, but right as we were approaching the opening, within a few minutes, the NASDAQ futures jacked, and I saw them go up 1775 from around flat or -1, just almost instantaneously, but very quickly. And then as we went into the open, it started to drift back in. So it just shows you how there's these nutty moves all the time in this market. It makes it very difficult to navigate. So if you're having trouble, don't worry about it. I know somebody emailed me or tweeted me something yesterday about how it's impossible to build wealth these days. For someone starting out with $30,000 or $40,000, it's impossible to build wealth in this market, and that's true. But it's going to be the case in any trendless market. And I don't think you lose heart. You just wait for the next big trend to develop. And I think if we do get a big trend, and I'm going to state the caveat that I could be wrong. I think it's going to be a bear market in 2016. And I should note that if we do see that, one of my plans is, and because I think the short side is so detailed and it requires more than just sending out simple alerts, you know, short this stock here, use X as your stop, which should, to me, should be intuitive if you know anything about short selling or you read the recent book on short selling. I think I'm going to have like a weekend review on the short side and maybe do that twice a week, but a short webinar, maybe 20 to 30 minutes, rather than rambling on for an hour as I am now. But in any case, that's something I'm thinking about doing because the short side is much more complicated. I think it would be much more helpful for people to be able to get a twice weekly sort of short review of what's going on. And I think that would be useful in the bear market because it is possible to make 50% or more. I think I made 100 and something percent in 2001 on the short side. So it's possible to make big money on the short side in a bad bear market. So I didn't really play the 2008 bear market because I was running a hedge fund and my partners in that fund didn't want me to be shorting. So we kind of missed that opportunity. But I did make a lot of money in 2010 on the short side, being short the day of the flash crash. So that was helpful. But in any case, it can be done, but I think I'm more comfortable doing it through the webinars and doing something like that. So if any of you are into that, just let us know what you think, and we'll take your feedback on that basis. Anyways, getting back to the FANG, so you got Facebook, but really, where's the best place to buy it? Here, probably. And then if you're trying to buy the weakness off of the 50-day here, the other day on Monday, and that's probably your best entry point. Here you're kind of fluttering around, maybe on the pullback this morning to the 10-day line. Let's look at Amazon, the A in the FANG. I want to come up with a better acronym. If anyone can come up with one, and it has to include Microsoft as well. Might even throw Starbucks in there. What other ones? I'm looking down my list. I consider Intel another one that's a big stock leader, but I'll get to those. I'm just going to cover all these big stocks. You see Amazon just going sideways, tucks into the 10-day, the 20-day here today. Maybe it can come out of here. And that's why I'm saying we could still see a melt up going into Christmas Eve. We had that last year. Remember, we've talked about this precedent, which to me, precedent analysis is mostly a bunch of BS. Things can give you an idea of what might happen and an idea of what the possibilities are, but they're not a roadmap. And in this case, I don't think that this can necessarily be seen as a roadmap, although interestingly, it is sort of panning out. Let me see if I pull up the comp here, the volume's going to be incorrect. Yeah, it's probably another cold caller. Whoops, no, not a percent, it's a dollar sign. There we go, now we got it right. Okay, so if we let's look at December of this year so far, and we go back and look at December of last year, and you can see at the beginning of the year, is this last year? Yeah. You had a pretty sharp sell-off, and the NASDAQ goes through the 50-day, and then it just turns right around. You get big volume, and you gap up. The gap up day, you close at the peak, and then you stall a little bit at the highs, and you kind of drift just a little bit higher, and then you sell off into New Year's Day. You start a sell-off into New Year's Day that carries through the beginning of the year. So in this case, what we had happen, you pulled back, you broke through both of the moving averages, so it looks pretty ugly, but you undercut this low. Okay, now what I noticed at the time that I thought was critical to watch is that you saw stocks like Netflix, Amazon, Facebook, whatever, all coming into their 50-day moving averages. And my theory at the time was, okay, we just undercut the prior low from November here, and that might set up a reaction rally, because I'm still expecting a tendency to drift higher into Christmas Eve. What happens after then? Who knows? And I think we need a good bear market if we're ever going to get out of this total sideways crap and muck, this sewage, you might call it. I think we need a nice bear market to kind of clear the decks. And who knows? Maybe we just do this forever. We become Japan. Let's see. I'm just getting some people say, great idea, do it. Brief seminars on shorting sounds good. Great. Okay, yeah. So I think that's what I'm going to do if we get into a bear market where I think the short side is going to be the consistent side to stay on. Now, the other side with the short side, or the other aspect to the short side, is that there are also long opportunities as you're shorting. And I have learned that when stocks rebound, so for example, if you saw, I don't know, I'm going to try and find a stock here. Let's see. Something that was a short earlier. In some cases, if you see a pocket pivot or something, you can try and come in after you've been shorting, because let's say if you shorted this one up here and it comes down here, it undercuts this low, see that, and then you could trade that, look for a bounce back up into resistance. And there are techniques that I use for that when I get to a spot where you could have an undercut and rally. So it does become an active process. And I would say that for me, the short side, well, the long side, I try to mostly at least swing trade and longer term trade if I can. On the short side, it is by nature a short-term endeavor. You're talking about a few days, sometimes as little as a day or two, depending on how things blow apart. Sometimes they come off pretty quickly. And it's not so much a strategic thing, although it can be played that way with smaller positions, because the volatility, I think, makes it dangerous to try and hold huge positions on the short side. I can remember in the O'Neill account that I was running way back when, in 2001, I was only short like 30%. So I had 30%, I think 4 or 5 positions short. I think there are things like Microsoft, Cisco, Broadcom, Checkpoint I think was one of them, maybe Qualcomm. But I had 4 or 5 positions short, and I was only net 30% short. But I was able to make about 33% that way. In my own account, I was running it a lot heavier and a lot more actively. But the O'Neill account was a lot bigger, so you can't really flip in and out. And that worked out pretty well, but I think you have to use smaller positions. So in any case, getting back to the fangs. Fangs a lot. We can come up with a lot of fangs puns now if you'd like. That might be entertaining. But basically, you see this pulling back. It could continue just going sideways for a long time, and then it breaks down with the market. I don't know. I don't see anything telling me that it's necessarily in trouble, although you are seeing some spikes here. If you can see this, let's make it real big. Yeah, you can see here there's some selling spikes in here and in here where volume picks up, and it's being sold into. But you notice here, down here, you get some support coming up through here, so you know it's stalling a little bit here. But so it's just going choppy sideways, and you'd have to wait and see what happens if it really starts to break down, and what also is going on in the market at the same time. So the other one is Netflix, the N and the FANG. And that's sort of chopping around. But if you look at this thing, and we talked about this before, one of the things I'm wary of, and it's why I thought this breakout was going to be premature. You see the breakout here, it fails, and now it's up here, reverse on some heavy volume. You run into some selling up at the 130 level or so, and then you come into the 50-day. That was on Monday. Boom, you bounce off. And so if you were opportunistic, you could have taken a position there. And from a short-term trader's perspective, this allows you to keep that tight stop that I'm talking about, because your risk reward is smaller. It's not, you're not looking for so much, maybe in some cases 5–10%, most cases 5–10%, maybe a little bit more, but you can't tolerate more than a 2 to 3% loss. And so the closer I can buy to that line, the better. And if I can do that, then you might get some upside on it. And you can see that you've gotten about 10%. So from here to here. And now it's dipping below the 20-day. It may retest the 50-day and just continue to base out. But net, it's not really going anywhere. And the place to really buy it was here on this pocket pivot when it reversed off the 50-day. There was also, as I pointed out in previous webinars, there was also a trend line breakout. If you draw a line across the tops here, you had this trend line breakout. You notice the pullback here held the 50-day and the trend line breakout. And that's where you really want to be buying the stock, either this day or this day. If you're buying the breakout, you're just another IBD subscriber being set up to lose money. And so you just got to get that out of your mind. I think at some point when we get a trending market, again, breakouts will work. And so you want to keep an open mind in that regard. But I do think if you start to see breakouts work, you're also going to see early buy points such as pocket pivots within the base work as well. Because we know when you're, right, Dr. K?
I believe when I discovered the pocket pivot in 2005, I was so excited, but then I thought, you know what? This is no good if it's not going to work in 1980s, 1990s, where you had these great breakouts. And sure enough, true to form, the pocket pivots were so stellar in how they performed. I wish I knew in the 90s what I discovered in 2005, because then it ample difference actually to all the returns I had in those years.
Yeah, so, you know, that's all to say. If we get into a trending market, a lot of these things are going to work a lot better, and they're going to give you an advantage. So, yeah, I'll go back to what I was saying at the beginning. You know, I'm ticked off because I'm not up triple digits again. And now some people will say, well, you're stupid. My wife thinks I'm a moron. I should just be happy for what I've been able to make after the last couple of years, and that I'm not losing money in a year where, as they say, active managers are having their worst year since 1999, which I thought was interesting because 1999 was a year I was up 1,000%. So I'm not sure if that's all meaningful for me, but you know, and you're seeing this Bill Ackman or Will Ackman, the guy who likes to come out in short stocks and then go on CNBC and tell everybody about it to push it down, is getting hammered on this VRX, Valiant Pharmaceuticals, and he's down, having his worst year ever or something like since 2008. So, you know, it's a tough year. So just remember one thing: if you think you're doing terribly, there's always somebody doing a lot worse than you are. So, quick question I'm going to answer. Someone asks, are put options appropriate for your style of shorting? Of course. If you know how to deal with options, you understand the various components to their premiums, the time premium, the volatility premium, what, you know, the betas, the deltas, the sigmas, the whatever they are, I don't know, all the Greek letters that people apply to them. And you understand all of that, and you know when you're buying an option that's reasonably priced given the objective of the trade. And I think, yeah, use your expertise in options to short. You can limit your risk that way. To some extent, you limit your downside because you're not going to take a 50% position in an option, but it does allow you to mimic the same leverage. So, you know, like a 2,000 share position short in Apple can be emulated with, I believe, 20 puts, and you're using less money, but you can lose more of that money if it goes against you. But net to your portfolio, I think it can work out just fine. So if you like options, yeah, go for it. Anyways, getting back to the FANG. The N in the FANG, Netflix, you can see here, this is a pretty sloppy base, and you can see the wide ranges. So to me, it's failure prone. So if I saw this thing bust a 50-day, it would come into play as a short sale target. And that may be happening, or maybe it's going to make another run back up to the highs, and then it becomes shortable there. But I don't know. We'll see what happens. It's still, you know, sloppy, choppy, and really go nowhere unless you're adept at trading these intraday or short 2-3 day moves, okay? The G is not, well, I typed a G there. That was a nice reflex. Google, otherwise known as Alphabet. I don't know. I'm thinking they were short on creative juices that day when they named this company. In any case, you're seeing a pullback into the 10-day line on is it light volume today? I don't know. I got to check some of these. Let's take a brief detour to my HCS Investor software. We're going to take this filter off. I'm sure someone knows a quick way to do that. But let's look at Google's volume rate right now. It's 61 points. So it's actually, is it up right now or is it down? It's up a pinch right now, 6 cents. So it's holding and volume is up. So it's getting support, but it's also triple witching. Same thing with Facebook. Same thing with Amazon heavy volume, and it's just kind of holding the 10-day. So, and you can see the projected volume here is projected to be very high. You can get excited about that, but you have to remember it's triple witching. So you're going to see a lot of pocket pivots today of names that close. If they close up and held a 10-day moving average or 50-day moving average, then they're going to show a pocket pivot just because of the options expiration volume, which doesn't mean anything. But you can see these are showing heavy volume. They're trying to hold support, so maybe they're in a viable position in here. Here's Microsoft coming in right on top of this base. Notice how it's tried to get out of here, but it just can't go anywhere. So trendless market, trendless stock. Tried to break out here. If you bought that breakout, is that a bird screeching in the background there, Dr. K, or is it some weird unknown? Anyways, this breakout. What's that?
I think it's landline. It was ringing. But go ahead.
Oh, that's your phone. Wow, that's a nice ring. Do they have cold callers in Brazil?
No, they don't. They better not.
Good. They shoot them there, right? No.
Yes. You call back at 3 o'clock.
Anyways, so you know, this is going nowhere. Maybe you buy it here when it goes up on Monday. I don't know. But I think if you were going to buy it, you're looking at the 50-day or the lows here as your, you know, maximum downside stop. But you're giving yourself, you know, 4, 5, 6% of downside there. So again, all of these names should be watched. Now I guess we're now FANG them with Microsoft. All these need to be watched because if they start breaking support, then that probably tells you we're going into some sort of a bear phase. So, and as far as the Fed goes, I think it's one and done. So. And we're watching to see if gold trying to form a bottom in here. I think gold may be near a bottom just on a fundamental basis that the Fed is one and done, and I think their next move is if they're going to be lowering rates again or coming up with some new creative QE program. So in my view, that's probably where you're headed in 2016. I don't think the U.S. economy, even though Janet Yellen was babbling something about 3 million jobs or something in 6 years, which really is nothing. I think when Reagan took over in 82 or 83, when the economy started getting going, we were producing 3-4 million jobs in a year. So they're way behind, but she's trying to spin things positively to justify raising rates because I think they had to raise rates. They were sort of painted themselves into a corner. People said that if they did, the market would rally, which it did for just one day. And now we're down 2 days in a row, and we've given up all those gains, as you can see here. And so I think gold may have a shot at moving higher, but it may take some time to turn. The other thing is if you do get into a really bad bear market, they're going to take everything down, and that's going to include commodities and including gold. But I'd be watching that dynamic and see how that pans out. Someone's asking, I'm just going to detour very quickly because we're getting a question on the square. Well, to tell you the truth, you're being kind of lame if you have to ask us about this one, because you can see what's happening. It's pretty clear to me. It's just in a tight, unless you just want us to talk about it, so, which is fine. You know, I've been buying this thing down along the 12 level, and it runs up, I sell it. And I think there's a lot of overhead. You can see all this volume. Came out, I think, at $9. It was offered, and it had a nice move. And you know, a lot of people say this one was kind of a poor offering, but if you look at it, if you got stock at $9, you're doing pretty well, because you're still up a good 40, 50%. So nothing to complain about there, right? And you're going sideways here, and you can see that you get a pocket pivot right here, and it runs up. But again, this overhead is going to come into play, and it's not clear to me when it finally lifts and the stock's able to move higher, but I think it can move higher. Now, if we look at the weekly chart, and to make this look right, I gotta really scrunch it around here. Let's do this. How's that look? That look better there? You can see it down here. Yeah, we'll put it next to this guy. It's pretty tight closes along the 12 level here for these 3 weeks. So that's a 3 weeks tight pattern in my view. And now you're trying to come off, but you might base around a little bit more. And it might take some time, maybe when the stock becomes marginable after 30 days. So we got 1, 2, 3, 4, 10, 15, 20, 21 days so far. So you got another week or so, maybe after the new year. Maybe this is one to look at. You know, I think it's an interesting business, and I know people have told me they use their services for their business and they work like a charm. And so I think you know, they're also into mobile payments, and I think all of that is viable. Someone else was commenting to me, and they sounded pretty knowledgeable. So something about the idea that eventually banks will become obsolete. And what you'll see happen is you could keep your money on a USB stick or somehow keep it electronically rather than keeping it at the bank. And the electronic money would work just as well. So you go shopping and they would just take it from your USB stick or whatever, wherever it's stored electronically. And I thought that's an intriguing concept, because when you think about it, how did the banks evolve, and what are they really when it comes right down to it? And what if nobody needed banks anymore to facilitate things like credit? So, for example, you've seen this, is it Dr. K, what is that one, fundme.com or something like that? You're familiar with all that stuff, all the cyber economy there.
Say it again?
What is that place where people can get money to fund, you know, their business, or if they're trying to fund their college or whatever they want, or their wedding, I've heard. What's it called, fundme.com?
It's a crowdfunding concept.
Crowdfunding, yeah.
So,
you know, people may go, mortgages and things may move more into a cyber state where the banks have less to do. So I don't know if Square is a type of company that can take advantage of that. There's always PayPal, which is another one in the payments. But, you know, I've been watching this one. You can see it down here. I think this works pretty well. We can see the daily chart up here and the weekly chart down here. It's trying to form a cup with handle, but it's just not getting anywhere. You had a pocket pivot here, but that was short by 1 day. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So this is the 10th day here. It wasn't higher. The volume is not higher than that day. Now, it's a 5-day pocket pivot, but you know, this is where, if you're not paying attention, a little knowledge can be dangerous, because I always talk about clusters of pocket pivots, not 5-day pocket pivots, individual 5-day pocket pivots as being meaningful. I want to see clusters. I think that's telling you something when you see clusters. It's one of the reasons why I had these guys, they put this on, and you get a nice visual view of a 5-day pocket pivot with all these blue highlighted areas, which you immediately can identify clusters, okay? So that's what I like to see. So clusters are cool when it comes to 5-day pocket pivots. When you're seeing a 10-day, that's a single pocket pivot I think you can rely on. But you got 1 day to pull back here, and it comes out and nothing doing. So it's rolling over again. And I think this one is probably one you buy on weakness, but it's not going anywhere. And I'm not sure if they're really the leader in the payments thing. You know, I thought for a while GPN was doing something in payments. Look what happened there. They announced they're buying out another company, and that kills it right away. And that, you know, that sucks, because if you're long the stock, it's acting pretty well. Maybe you get some trouble here, and that's telling you, okay, maybe I should back off. Okay, when you see that big volume, the biggest downside volume in the pattern, and the thing, then it blows up. So that, you know, that's kind of out the window now. Are you going to buy it here? I don't know. Depends on how this new, I forget what the name of the company is. It sounded kind of folksy, like Old West wagon train type name. I'm trying to remember what it was. Um, Somebody says, yes, I just like to hear you talk about stocks. Well, that's good. So at least somebody likes to hear me talk. I know my teenage kids don't. Let's see. All right, so where were we? Let's cruise around, looking at some of these big stock names. LinkedIn, under the 50-day now. So this is not starting to look like a short, but this is what it looks like on a weekly chart. It's a big, ugly pod-like formation, and it could be failing. You know, the thing with a pod is once you break the 20-day, that's your first signal you might be in some trouble. And it broke the 20-day here, and probably was shortable right in there, and undercut and violated the intraday low of this Bible gap up day. So there you have a Bible gap up that didn't work. And in this market, most of them don't work. They rarely go anywhere, although you did see one work in Amazon around the 600 level, and it's gone up about 10% or so, maybe a little more, 11, 12 from there. And that's worked. But again, you know, you're getting 10, 12%. So what are you going to do? Put your entire account into Amazon and be up 10%? Wow. You know, so it's Heartland Payment. Thank you. That's the name of the company that Global Payments is buying. But this is starting to look like a short, and it could be a pod short. Now it got hit resistance right at the 20-day. Actually shorted it, and it held a 50-day. Now it's going lower. So you know, Gilmore's rule is, or Gilmore's law is like Murphy's law. If you short something and you make money and then cover it, it will always go lower. Okay, but if you try and come and short it again after it's moved a little lower, it will immediately turn back to the upside, giving you another great short position, but or short sale entry for your position. But you'll be losing money on the reshort anyways. Flaming, I like it. What is the I though? Intel. Oh, that is brilliant. So we got Facebook is the F, LinkedIn is the L, Amazon is the A, Microsoft is the N, Intel is the I, Netflix is the another N? No, Netflix is the N, that's right, and Google is the G. Hey, that's clever. I like that. So I'm going to send that person a VoSI t-shirt. Unfortunately, we don't have any, so it's on back order. It may take a few years to get to you. But I like that. Okay, flaming. The flaming stocks. And maybe if they all start flaming to the downside, then that may tell you that we've got some issues for the market. But yeah, I'm just watching this market trade. Now we're down 215. What were the lows on the day? I'm not even really paying attention. To tell you the guys the truth, I'm mostly done for the year. If I take any positions, they're like 10, 15% max, and I don't see anything major I need to do. I'll wait till next year. My accountant appreciates that too, so less of a mess for him to clean up. But these are looking pretty ugly, and we're coming down. Let's see, the low of the day. Where's it? No, we're just off the lows. So the low is around 17,250, somewhere around there. A little lower, 240. 17,250. I can't see this. There it is. 17,256.59. So we're about 28 points off of the lows. Not much. But anyways, I like that flaming. But if all these start flaming to the downside and coming apart, we might be in some trouble. Right now, they're all holding up. I mean, they're intact, okay? And I'll use that term loosely, I think. They're not going anywhere, but they're intact. So, you know, Facebook is holding in a base. LinkedIn is trying to hold the 50-day and holding the recent lows, but it looks like it may not be. So that may be the first one to start to flame. Amazon is holding up in its base. Netflix is just fluttering around the 20-day, and it's holding well above the 50-day after this trend line breakout. So I would consider this a failed breakout. So it's still intact. It hasn't violated the breakout. And Google holding up. Microsoft boring but holding up. What are the other ones? Intel boring but coming off and pushing to the 50-day. So what do you do? Buy it here. So you buy it here, use a 50-day as your stop, and maybe you get a trade back up to 35. Wow. And you'll be rich. Okay, so you know it's just that's that kind of a market. There is no trend, so why fool yourself and pretend there is. Wayfair we thought it was a buy here and a buyable gap up. It's continued higher. So that's what the pattern looks like on the weekly chart. So that, it's breaking out. Are you going to buy something sticking up? I don't think so. And some of the movement might be due to what's going on with the triple witching today. I like to talk about Infi. This is a great little stock, look at this trend. It's pretty shallow. Long base, up move, and now it may just be in a long base again. Starts to look ugly, drops below the 50-day, 10-week, moves higher, breaks out, moves higher, pulls in again, and breaks the 50-day, 10-week. That's back down here, and then comes out again here and here. And now this is what we're doing, looking ugly. They announced a $150 million convertible bond offering, and the stock tanks and drops below the 50-day, and it's violated it now. So it's done, right? I don't know. Maybe it's just coming to the top of this base, form a new base, and try and come out. I don't know. But it does illustrate the difficulty in this market. I think one of the best names we've had was this one, which is a pocket pivot here on this day. AY, I don't know where did that come from. I got to be careful where I click there. But you can see this continued higher from here and held up tight along the 50-day, and then took off again. You had a pocket pivot somewhere in here. I think it was this day off the 10-day line, and has continued higher. Acuity brands, they make LED lighting, so that's doing pretty well. There's another one. What is it? E. Anybody know this one? EFOI. Energy Focus. Yeah, this is another. It's a little one. They make LED lighting. It's kind of setting up here in a base. I don't know. It's not really going anywhere, and it's thin. Danger. I'd rather play this one, but this one has done pretty well. Most of our other names have not gone anywhere. Palo Alto Networks viable gap up here, but it goes nowhere. Undercuts this low and bounces back above the 20-day line. And it's kind of in no man's land. That's what it looks like on a weekly chart. So it's trying to set up. Maybe it does break out. I don't know. Maybe we have a bold new bull market next year because we start discounting some change in leadership in Washington. Although I tend to think we're spinning out of control and there's nobody that's going to be able to stop this big ship from running aground, which is the U.S. financial system. But we'll see. Anything can happen. So. Let's see that I would consider a big stock. So that brings play maybe. I'm looking at cyber. I actually have a tiny short position here. I don't know. I may cover. It's not really working for me. I did get a point out of it. I covered half of my position on the break this morning. They had it bid like at 43.20 and offered at 44.10. They brought that offer down a little bit, so I was able to cover half of my position, and I'm just sitting. But net, it's not really making me any money. And we'll see where this thing ends up going. It could fail here. Notice here, if we look at the weekly chart, it's a rolling sort of top. I think the thing could go back down to the 30s from here, and it could just flip above the 50-day for a little bit. You notice you have some overhead along this level here, right around the 45, I guess, 45 level roughly, and that could roll back. So Fortinet's been a dog. This has been a good short, actually. And it's ugly. And Vasco Data, it's not doing so well. Try to make a comeback. And the other thing about this market that I've observed is that, remember like last year, maybe earlier this year, some of these bottom fishing and roundabout pocket pivots actually worked out pretty well. You saw a number of them working. You're seeing fewer. And I would say AYI, Acuity Brands, is one of the few. But you're seeing a lot fewer work, and their progress is halting, and then they just come apart. Another one has been Infinera. So, but anyways, getting back to the cybersecurity stocks, some of them are deep down in their patterns. I still think Palo Alto Networks is the leader, but a lot of these other ones are probably heading lower, and this is at a shortable position. So maybe it'll work. So someone's asking about Pacira Pharmaceuticals. Weren't they bought out? This is what you're looking at on a weekly chart. So am I going to buy this? If you like it and you think it's going higher, then maybe you could have bought the viable gap up using the low as your stop, but you're pretty extended at this point, so there's really no reason to try and play this. And again, I don't know. Oh, that's Scotty. Okay, Scotty, you know better than to ask that kind of question. So, Although I realize you're probably still hungover from your sailing trip in San Diego, but you know this isn't really in a position where I'm going to get excited about it. Now, one I got excited about the other day was Solar City on a gap up. That's because there's huge short interest on this thing, and for good reason. I think they're financially unstable. But it actually started coming up, and early in the day it was just sitting right above the 200. So I figured, okay, on this one, the intraday low is too low, but you could buy it along here and use the 200 as your quick stop. And it just kept going higher, and it gapped up yesterday. And that was because there's an agreement, I guess, among the House Republicans that they're going to push through an extension of the solar tax credits. First Solar, which I think is one of the stronger solars, and they're more financially, say, stable and set. They don't have a lot of debt. They had a big gap up, and that looks playable. Yeah. Go ahead.
Gap on that news, and but you know, it's unfortunate that this group, if you look like at a weekly on FSLR, it just really hasn't. It's been a very choppy pattern for a number of years. You know, I remember the heyday was back in 2007, where I played these and did very well in a hurry because they were all screaming. But you know, as the nature of this market the last several years has been, and it seems like once an industry group has its moment in the sun, then it just it never comes back to that level of growth in terms of price.
Yeah, you're right.
There's a lot of examples. So yeah, it's sort of like these things become one-hit wonders, and I kind of almost am conditioned to expect that you know, if a group has had its great moment, then don't expect it to do so again. But I do know, like, you know, it's like silver in the 2011. You know, had a great moment, and hasn't shown anything since. And of course, you know, but that commodities, of course, are off their rails. So
yeah,
I'm sure time will come again for commodities because silver and gold tend to be cyclical. But when it comes to industry groups, I haven't seen any evidence, at least since the big dot-com boom in the 90s.
Yeah, and so the solars, you know, they're all moving on this news, and you know, this could move higher for a trade. It could move up to the mid 70s, up to this level of resistance. It's cleared here right now, but it would have to hold this pocket pivot. So I look at this as a short-term trade. It may be a few days, it may not be very long at all if it fails. But Solar City was the stronger one, and to me, that's one of the weaker names in the group in terms of their financial stability. But they are a major player in home solar, and I see them in my neighborhood all over the place. So, but that could have been played that way. The other one, SunPower, you know, is kind of holding along the 200-day, but you know, that's an ugly weekly pattern, and I don't know, you know, it's just very, very risky. The other ones are Trina Solar, which had a nice move up, but look at it on the weekly patterns. You know, where is it? It's kind of between here and nowhere. What are the other big? Is JSO in there still? Yeah, so that one's holding up pretty well. But again, this is where they are in their patterns, and they've had their moments before, but they really haven't panned out. So, you know, these are trades. To me, these are trades. And like I said, this is not a trending market, so all you have are short-term trades. So if it's not a trending market, don't be a moron and keep trying to play it like one. But I think at the same time, you can't look at stocks and say, oh, well, you know, this never has a big trend, and I'm not going to buy it. But you can buy whatever you want. You're not going to get a big trend. You're trying to play a lot of trades, and a lot of these trades occur within the bases, and they're part of the back and forth movement by definition. You know, so the trades are there, but it's just not. You know, in terms of making big money, you have to ask yourself, is it really worth the trouble? And for me, no. So, and that's why I'm basically not doing much as we go into the end of the year, just kind of taking an easy run. It's come straight up off the bottom though, so if you buy it here thinking it's going up forever, I think you're a little silly. And because you're right at this peak, and you could run into some resistance and pull in, but you could watch and see if it comes down, say, into 11, maybe it's playable. But what does this thing trade on average? 648,000 for a $13 shot. Well, it's doable, but yeah, that's another. There's a couple others. There was well, Sedge, Good old Sedge. That one's holding up. I think they're a strong name, but you know, this has come up. Maybe it's going to have a big pod. It's going to form this big pod, come up the right side. But that's a strong move, and it's holding up. And this is a strong company, I think. But at this point, you could have bought the Bible gap up using this low, but it's way extended now. 10% probably, something like that. And so I'm not going to touch that up here. And maybe it settles in. Maybe it's something to keep an eye on for next year. You know, I'm not going to say. I think we're going to have we're likely to have a good bear market or some sort of a bear market. But there's always a chance we'll have a bull market because there are catalysts for a bull market in potential change in government coming in November, assuming that happens. Because I think there's a lot of things going on in the economy and the cyber technology area and all sorts of facets of that. The cloud, you know, everything and entrepreneurial type of technologies and whatnot and businesses are all out there. And if you give them an environment to thrive in, rather than an environment where you've got all this regulation and Obamacare and high tax rates, then I think you have something. You have pent up innovation or whatever you want to call it that will, or a lot of innovation that's turning into pent up performance potential. So I think that's something to keep in mind. So you always want to have an open mind. You don't want to get locked into a particular viewpoint, like we are in a bear market, or we will have a bull market or a bear market. We'll kind of go with things. So, anyways, I think I like Solar Edge as one of the better plays, but it's not in a viable position. So, first Solar, I played for a couple days, and you get a couple of bucks, but again, not much to write home about. Let's see, biotechs. Anybody into biotechs these days? They're not really going anywhere. This is what Biogen looks like, so it's not going anywhere. You gonna buy that? I don't know. It might be good for a trade off the lows from 280 to 300, and maybe that can happen if you look at buying weakness and selling into strength. It's a channeling market. Channeled this. Celgene, another one. Looking kind of weak actually, and if we kind of blow this up here, you can see it's looking like a head and shoulders. So there's definitely resistance when it rallies up into this level. So I think you might want to keep an eye on that. Notice that you have at this high is now coinciding with the 50 days. So that might be a problem. Gilead definitely a similar pattern as Celgene in terms of it's first a failed late stage failed base, and then now it's forming this sort of head and shoulders sort of thing. And you're finding resistance at the 50-day moving average, which makes this thing eminently shortable at that point. So if you were opportunistic yesterday when the market looked good, you could have shorted some of these right at the line, Gilead and Celgene, for example, and you'd be making money. The question is, could you have, and done it in a low-risk manner, given the way this market can change direction on a dime, you know? So it becomes very erratic and dangerous. But I think if you're going to take any shots, you have to do it at an area, whether it's on the short side or the long side, you have to do it in an area that is, number one, in a contrarian position. So in other words, you're buying pullbacks on the long side, you're shorting strength on the short side. And using that level of resistance, 50-day, 20-day, whatever the moving average is, or a prior breakout, or an overhead level of overhead resistance, you're using that as a very tight guide for a stop, or a guide for a tight stop. And that's the way you operate until further notice. So, and we all know when we start a new bull market that's going to trend forever, they will ring a bell. So you don't have to worry about that. Or you could subscribe to some guy's service for $500 a month. I saw one the other day, and it just blew me away. And it's some guy that used to be an O'Neill client. I'm not going to name any names, but we had to fire him because Bill O'Neill said he was stealing our stuff and telling everyone he had a database of all the greatest winning stocks, and he was using our Wanda apparently. So Neil was all ticked off, and he was an institutional client. He was just a single trader running, I think, a little hedge fund or something. But now he's marketed himself into a big name, I guess, and charges $500 a month, up to $800 or $900 for so-called private access. And I was thinking, oh, okay, if anybody in the public can pay you this money and then get access, and it really isn't private, it's more like public, but as long as you want to pay up, kind of like Hillary Clinton and getting access there, you just pay up. And but I thought it was really strange. Is why would anybody pay that much? Is it because they want to trade side by side with somebody who was in a book? You know, like, do you want to trade side by side with me? I think if you do, you're an idiot, because you probably would just be confused. And it also ignores a fundamental aspect of trading for every individual. They have to find a style that's suited to their own psychology. We're all different. We're all going to react differently emotionally, psychologically. And that's the biggest part of becoming a good trader, is understanding yourself and your own psychology. So my psychology is not the same as yours. Maybe in some cases it is. But for the most part, it's not. And even Bill used to tell me when he had 10 money managers internally, Bill O'Neill told me that they all operated differently. Nobody operated exactly the same. And his theory for that was that everybody had a different psychological profile, and that's why they operated the way they did. So the idea that you're going to trade side by side with me, unless you really just want me to run your money for you, it's sort of flawed on that basis, I think. You can't really learn to trade by trading side by side with me, because you may see me do things that are totally antithetical to your own psychology. So I don't think that works, and I don't know. My view is if I'm going to do websites, I have to be a trader first, and I want to focus on my trading. That's where I should be doing most of my real activity if I'm a real trader. If I want to get into marketing a website and charging people up the wazoo so that I can spend half the day with them, that's another thing altogether. So, but I want to remain a purist, and also I think, Dr. K, you'll agree with me on this. We want to price our websites such that the average guy and gal can afford it. You know, if you have a $40,000 account, you have to pay $6,000 a year or $7,000 a year for a website subscription. That's eating up into a lot of your equity. And so we kind of think of it in terms of, okay, $600-700 a year to subscribe to our stuff, even for a $30,000 account. That's palatable. So, you know, it depends on what your objectives are. I don't want to become a marketeer and rip people off. So, anyways, somebody's asking about Tesla. It is in a short position. You got a pocket pivot. I thought this was a tradable move the other day. It was good for a few points, but yeah, it's in a shortable position. I think there was some news about California allowing people to get driverless driver's licenses, which I'm not sure how that one works, but I didn't really look into it. Somebody says some good day trades on XIV UVXY. Yeah, I mean, you sell into you short it into strength and buy it into weakness. And to me, this is just something that zigzags around. You know, I don't know if you can really predict what it's going to do, but I mean, it's as erratic as this market is, and the more erratic the market is, this seems to equate with that. So, but yeah, there are some good day trades, and there is a way to do it. And we all know, if you've been following these webinars for any period of time, we all know how that can be done. Let's see if I can find my chart. I know it's buried somewhere underneath it. There we go. If we look at the, you know, the 620 chart, you can see here's a buy signal here, sell signal here. Now, what I've noticed in most time, this is from trading currencies. I use a similar chart to trade currencies, but you get a buy signal here, and it gets a nice trend, and then you get a sell signal. But for me, that's not necessarily a reason to go short the thing. A lot of times it will continue to move in the trend. So I would look for it to break out again, and you got that here. And it's pretty sudden, but you got to be taking your shots along these points. But it can work if you want to day trade the VIX. So I think a 620 can work pretty well. It works pretty well for currencies. So the only problem with currencies, in my view, is, you know, you can be sitting there and then all of a sudden the currency you're short is jamming 100 pips against you because of some news or some Fed head or some Bank of Japan guy that said something, you know, and set everybody off. So there's always that strange volatility factor with Forex, and that's where you'll get losses. Anybody who does that, but that's another topic altogether. Let's see, I did cover the biotechs as I see them. I just look at the four biggies. I mean, Amgen's the other one. And that's trying to hold above the moving averages. It looks a little bit better. Whoa, that doesn't look good though. Maybe that's a little better. There we go. But you can see it's a similar sort of situation. They all look the same, except for Biogen, which was the first to break down. You got Gilead, looks like that. Amgen, looks like that. Gilead looks like that. So you can all see they're all late stage failed bases from back in May, June, July, and broke down into August. And now they're all sort of fluttering around, and they look like they could come into shortable position yet again. and some of them have in the last couple of days, such as Gilead, and we looked at Celgene similarly. So, they're out there, but it's very difficult because, again, you have to be thinking in a contrarian manner rather than getting all excited about the movement you're seeing in one direction or another. So I advise everyone not to chase a directional move as you see it and it starts gaining some momentum. Start looking at that perhaps as maybe even a short-term contrarian move. I'll give you an example. Is Facebook. Look at Facebook. Breaks down hard this morning and bottoms out around 105. It's near the 10-day. You'd look at that as a contrarian move and try to see where you're gonna try maybe and come long. You can see the cross on the MACD right here. So you could have gotten long the thing and you'd be making a whole point. Isn't that exciting? So you just do that over and over again and you'll become filthy rich. I guarantee it. But you're gonna have to pay me $800 a month. Now make it $1,000, even $1,000 a month in order to trade side by side with me and watch how I implement the 620 system. Okay, day trading stocks. Yeah, I can tell you're all probably going to sign up for that one. You say something, okay?
UBXY.
Yeah.
I've studied left, right, forward, TVX, all this, and the thing is, you can try it. If you're a day trader, you want to sit there in front of your screens and you can catch every trade. It can work. The only problem, though, is it's just slippage factor. And also, when the market gets volatile, it's great, but when it's quiet, there's a lot of noise in the pattern. And again, the slippage kind of eats into your account. That's the only issue. So, you can ultimately do some levels of profitability with it, but you have to be very careful. And again, this sort of thing is sort of a derivative of what the volatility model is all about. So obviously the volatility model does work with these instruments, but not on a day trading level, more on a swing trading to longer term level.
Okay. I want to talk about Salesforce. I think we're going to finish up. This is one of the other big stocks that I've liked recently, but it's coming apart. And you see it, if we look at this, wrong chart. Where is that? There it is. Here's a breakout, and it's starting to fail. I mean, it's holding the breakout. And you got support from below the 10-week line and on top of this area of congestion here. And you're able to bounce off. But notice how it tries to rally and it can't. So this is actually typical of how a late-stage failed base setup, LSFB as we like to acronymize it, how it will occur. You'll break down through the 50-day, you'll get some rallies up into the 20-day. So I'm starting to look at this as being shortable along the 20-day. I thought if it could hold the 50-day, it might have a chance of pulling an ugly duckling type maneuver. We've seen those a lot of times where something's breaking the 50-day and it turns right back around. If it can regain and hold the 50-day, and then of course after that the 10-day. But at this point, it's starting to look like a short. So, and in that note, I noticed we are just about to pinch the lows. Anyways, you guys, I think we're 9:03. I think we're done. We're done here. So I just wanted to cover Salesforce, but you want to maintain this sort of conscious contrarian approach. So, anyways, that's all I've got, you guys. Thanks for showing up, and we'll talk to you later. Take care.
Take care, man.